Good evening, everybody. This is Stefan Dote at tradingcandles.com. It is June 17th, 2014, and we were just going to do a quick rundown. We made a few changes to the portfolio, so we wanted to present that to everybody. Starting with our disclaimers, we are not a licensed financial advisor, broker, or dealer. This video is for educational purposes only. The viewer should do their own due diligence before making any financial decisions or investments. And with that being said, I'm going to go ahead here and open up our charts real quick. So today we added two new positions. MYL, pharmaceutical biotech company. This is a second to load here. And if you remember, we watched a previous video, we actually got into this earlier back here. Kind of broke our rules, so we just went ahead and got out of it. And it's making a breakout of this trend line. I'll go ahead and extend this a little bit. You can see that we've broken up over that. And it just had a little bit of rising MACD. Nothing serious, but you know, the old high is up here at 57. Fundamentally, this is a good company. It does have some growth. So I think there's an easy 10% to be had here. So anyway, we added a new position in that. The second position we added was CVS, everybody's favorite drugstore. Looks like our data is loading a little slowly today. So this one, we put a $90 fundamental price target on it. It's a pretty slow mover. It's gone from 60 to 76 in the last 9 months. So that's maybe, I have to actually think about that. That's about 20%, so not too bad actually. I feel it's kind of safe. The market's creeping up slowly. There does seem to be support for the movement that's happening, you know, but when you're at all-time highs, you want to be careful. And just for the heck of it, we'll go ahead and look at these charts on a 2-year to show you the backup of helping me choose this. So here's MYL, Mylan. We have the CCI positive. We have the DMI positive. We have the moving averages positive. We have this little, this is kind of a wedge, kind of a descending triangle. Most times this technically should break to the downside, but it seems to be pushing up. So we have plenty of long-term trend support with this. And I guess it looks like back in February I put a $75 price target on it. So, and then CVS. And, you know, this is kind of your grandmother's stock. It just kind of keeps going up and up. Not a whole lot of volatility. Got a big pullback here from 70 down to not even 65. So, you know, that's 7% pullback maybe. So you can feel pretty safe holding this, and even if it does pull back all the way to the blue line, we're still going to be feeling pretty safe. So go back to our daily charts. Again, this is just a quick rundown following the portfolio. On Friday, we didn't post this, but we did add to DD. Which is DuPont. We add right here in this little white candle. Now the MACD is rolling over. but we're holding this 50-day moving average. But this is another one in the Dow, which just kind of keeps going up and plodding along and sideways and makes a little up and sideways and makes a little up. So it seemed like buying on a pullback wasn't too bad. We're still above the zero line. We still have this $90 target on it. So if the market keeps moving up slowly, this should do okay. The next one we added to was EFII. Now we had a very small position in this stock. And again, using our 2-year, I just like to show this to show you what keeps us in. You can see we had this pullback, but never broke any of our signals to get out. And we're having this nice pop off this line here with the moving average pulling off of that line. So that's pretty bullish for us. And we're breaking over the 125-day moving average here. This is really a trading stock. The fundamentals, it's more of a growth stock. I shy away from growth stocks for long-term holds, so they tend to be much more volatile, as you can see here. But I think we could get another move back up into these highs if we keep going the way we're going, which would be a good 5 or 8% move. And that's the kind of returns we're looking for. We broke back above the zero line here on the MACD. And again, being above this zero line is bullish. Being below it is a little bit bearish. It's a very simple thing to look at. And let's see. Next one was TMO. It's actually the second or third time we've added to this in the last few weeks. So we're hoping it maintains. Its MACD is starting to roll over. We are maintaining above the 125-day moving average. And we'll look at the 2-year on this one, since it really is a pretty weak looking chart. But the fundamentals on this stock are really good. And as long as they keep meeting earnings, I think they're going to be rewarded with continued buying. And again, on this 2-year chart, you can see the pullback, but then you can kind of see it's pulling back up out of it. So that's a nice little pullback, and it's healthy. It was getting a little tired, it was getting out of breath, it needed to breathe and take a rest, and probably what they call shake out a few weak hands. And institutions kind of step in there and buy it. Some of the weaker hands sell it. So we added also to PKG. We have our $81 price target. We've had this for a long time. We keep adding to it. Not much else to say. It kind of goes sideways, kind of goes up. Again, this is a paper company. Its sisters would be like International Paper. And the last one we added today was XLI, which is the Spiders Industrial ETF. We had some good manufacturing numbers that seemed to keep coming in a positive fashion. So it seemed to be prudent to keep into the industrial sector. We do have a few individual stocks in the industrial sector. And so, again, this is going to be pretty low volatility. And we're trying to keep the volatility at this point low because the volatility in the market is low. It has been for a very long time. So low volatility eventually begets high volatility and vice versa. So we want to be prepared for any pullbacks, but at the same time, we don't want to miss out on any decent runs. And a few years ago in July, I just watched the market go up and up and up just by the smallest increments every day, and everybody thought, this market had to crash. And a month later, it was still going up. I think it was like 26 days in a row. It was unbelievable. So what's happened over the last few weeks is that we have sold several weak positions and have added to our strong positions. So our portfolio, the number of stocks has shrunk, but the position sizes of the stocks that we have grown, and we've tried to consolidate it into less volatile stocks to be a little bit safer. And that would be all of our changes for today. We hope you have a good night and hope you come back to see us soon. Thank you very much.